this. Okay, perfect. So now we're on to evaluating market. So we're gonna go through the rest of the process. I kind of gonna do a little recap of what we did before, mainly for kind of the question that prompted from Mary and a couple others as well. I got a couple calls and a couple emails, so I'm gonna kind of, for the next couple meetings, I'm just gonna kind of rehash over some of the previous stuff so everyone's like on the same page. Hold on a second here. I'm just gonna add in some people that just joined the group. Let them come in. Yeah, next time I'll have to have Quinn to coordinate the people coming in and out. So. Maxine, thanks for joining. Fred, thanks for joining. I appreciate it. Just waiting for him to sign in. I think there's some communications there. And Zoom takes its little time. Hi, Maxine. Did you are you part of the Passive Investors Club on Meetup.com, or did you find it through Evite? I think Eventbrite. No, nothing there. It's okay. All right, let me just move on. So yeah, so here's our kind of our rest of the series agenda and kind of the recap. So today we're going to be doing evaluating markets, and then next we're going to go on a detailed level of when we select a market, looking at the real estate. So we'll talk about the 4 major asset classes, in particular multifamily, manufactured home parks, self-storage, and net lease, which are the most prime tenants actually did well through most microcycles as well as through the pandemic. And then finally, we'll go through evaluating offers. So we'll get a copy of a sample private placement memorandum. We'll go through all of the pros and cons, all of the details in there. I'm trying to secure a securities exchange attorney to join us, possibly for the first 15 minutes, so he can kind of give us some of his take on what to look out for, some of the sections to really look into detail and all, and then we'll finally cap it off of the investing process of when we actually write the check to the sponsor once they start the project, and then what to expect after the funding is complete and the project is started, and then when we get paid, when we get reports, things to look out for, and all of those things in between. So just kind of rehash to kind of go over again kind of the goals, the initiatives for the club. And this year, me and Milton and Tara was talking and mentioning how we want to get everyone involved. When we had the in-person meeting in Vernon, it was a great group. We was kind of talking about a lot of our goals, and everyone wants to kind of get involved in real estate. So through this kind of initiative, this is a way for all of us to actually get off the sidelines, get involved, and really take an initiative. But first, starting with the education and building a like-minded community, and then finally, we're gonna the biggest goals is if people are working W-2s or have portfolio income, to get most of that or majority of that over to passive income. Actually mistyped that, to passive income for the tax purposes. So to kind of break it back down and to start from the beginning, just to kind of give everyone a overlay of what the whole concept and the process is that we're pooling our funds into a syndication. So what is a syndication? So a syndication is just a group of individuals. We pool our capital together and invest into a project. And typically it's a very large project, something that, either you have the money and you or you don't have the money and you can't do it on yourself, or you have the money and you want to kind of spread out your money into different projects at the same time. And one of the biggest hurdles of a syndication is the minimums. So the example that we're going to be talking about later is a 408 unit apartment building in Texas. The equity raise for that was $11 million. So unless you have $11 million to go buy this, you got to put into a syndication. So when they break it up into individual investor units, they're coming in with an ask of $50,000 and sometimes $100,000 just to get into a deal. So our concept of getting into a syndication on a smaller scale is doing what I call a group investing concept. But first, everything, of course, starts off with the education. So that's why we're going through all of this. So everyone feels comfortable. We know ins and outs. We know as much as the sponsors know before we start investing and getting involved in these projects. And of course, going through the multiple steps of course, vetting and finding a very experienced sponsor that have done projects like these before, that have turned around projects, that have a team that can support it. Next will be finding the proper asset classes that we talked about, like multifamily and self-storage. And then today we're going to be going into the marketplaces. As a passive investor, what should we look for as far as our best investable markets? And then finally, of course, to form our group, get all the education that we possibly can get before we take that leap into investing into a project. To the tool that we're going to use that we had talked about last week with the CEO of TribeVest. So TribeVest is a third party. This is a totally neutral platform. In traditional sense, we can do this or do all the elements on our own, as far as forming an LLC, creating a bank account, pooling the investors' funds together. But this new platform called TribeVest kind of facilitates all of that all in one online platform. The reason why I like it is it's very transparent. You can communicate through it, through the app. You can have it on your phone. It's really easy to understand. And one thing I also like there is, for our group's purposes, it allows us to contribute capital on multiple levels. So either if it's $1,000 or $5,000, whatever it is, we're able to, through this app, facilitate that very seamlessly. And through investing through kind of this group investment, we can be able to kind of minimize our risk by having a smaller capital contribution rather than putting up the whole $50,000. And then also you can set up into the system. You can, if you have a goal of $1,000 that you want to invest, but you don't have the money today, you can set up connected to one of your bank accounts and have it contribute on a monthly basis or a quarterly basis or whatever it is to get to that ultimate goal. And then once we reach that threshold of $50,000 or $100,000, we can then make that investment. So it really is just very flexible as far as our needs. But the biggest thing for us is this: it allows us to finally take action this year, rather than, oh, let me just wait till I get $50,000, then I'm going to start investing. If whatever you have, let's just start getting the process started, taking action, and really working our money to build wealth and to create cash flow as quickly as possible. Okay. Oops. So as an example, what our first group is doing, because we want to kind of show the whole group, the whole process from A to Z. So our first group is going to do $5,000 each. We have 10 people that's already reserved for the group, for the minimum of $50,000 for first investment to a syndication. Then from there, we've identified a couple of top tier sponsors that we're going to consider for the first investment. And of course, we're going to take the group with us all the way through the end to kind of understand how we make the decision as far as what is a good sponsor, what are things to look out for, looking at their track record, talking to previous investors, and then finally looking at the opportunity from a intrinsical value. Does it make sense real estate wise? Run the numbers. Can they perform on this project? And now with that, regardless of whatever capital contribution you put at, for the example I'm going to talk about later is a 400 unit apartment building. So even if you put in 5,000, you're still an owner of a 400 unit apartment building. So the goal is how many of these can we get into? And then we continue to build up, and then until we ultimately reach all our financial goals.
I have a question.
Sure.
So if you say you want to start out small because you're unsure about this whole thing, and then so with your amount, are you stuck with that amount to invest in something, or is it something that you start out small and then you decide, okay, maybe I'll add a little bit more to it as we go along?
Well, say if we invested, say for this example, the $5,000, that contribution, once we hit the $50,000 goal, that's going to be invested into the project. But we're going to be starting multiple pool buckets. So if you wanted to go put in like another 1,000 into another group, then you can do that as well and just continue as much as you feel comfortable with. So yeah, we have like we're going to of course set a financial goal limit. For this one, 50,000, and then once we hit there, and then we do all of the homework, and we're ready to make the investment, we pull the trigger. But then we're going to be opening up multiple buckets at the same time. That's going to be looking at other projects simultaneously, and then when we're ready for those, we're going to make those investments. So you can pretty much put as little or as much, and then you can kind of see how the first one goes along, how comfortable you feel. You can invest more on the next round. So Rich is really flexible to your comfort level.
All right, thanks.
Yeah, exactly. So like here's just an example. I put on the bottom here what this was. This projections came from the 408 unit sample deal that we looked at, and this was a deal I think was in Austin, Texas, or maybe it was another market, and they actually closed this one about 3 or 4 weeks ago. So their projections was 10% cash flow annually. They was planning on holding this property for about 5 years. So the combined returns, cash flow, and sale proceeds was 80%. So for this particular example, 5,000 the first year at an 8.9% starting out is $444 for the first year, and then as we continue to move through the years, it increases, and then finally when they plan to sell the property, you're going to get an additional 36% return on the capital. So, and you see here how it moves up is that's when they start implementing the business plan of increasing the rents that was below market and decreasing costs. So whatever things that were nagging the property, they'll cut it out, or they'll find ways to save money in different ways, and just continuously improve the property within that time frame that they're holding it, and then ultimately they sell it to an end buyer. And usually syndications are usually 3 to 7 years is the typical hold time. Normally they don't hold it longer than that. So the goal is to implement the business plan, do all of the tax benefits that they want to implement, and then get an exit out of the property, giving the investors back their capital, and then they're just going to continuously do project after project. And then anyone can stop me if you have any questions in the meantime. Thank you so much, Mary. Going back to why commercial, we had a question last week of why not go like flip a house or do a duplex. The very obvious of the economies of scale. We're looking at large 100+ unit apartment buildings, very large self-storage facilities, large industrial net lease properties, things like that. So we're going big. And the reason why is because on a single family or duplex, you can't do certain type of tax strategies on those, including cost segregations, which is like kind of like a detailed depreciation model where they're going and they're depreciating the office furniture and these different type of things. It's a really detailed, complex thing that an accountant doesn't even do. They actually have to have a separate engineer to come out to the property to do these. And this is really ways to just suck everything out of the property as much as possible in that first couple years. I got two little graphs here, kind of like a risk reward profile. And this is kind of just aggregating all the different common investments. I know a lot of people on the call, they own stocks, or they have like a 401k plan with their employer. So this is kind of showing kind of the different asset classes and kind of the risk reward profiles. And core commercial real estate is at the top because of the many benefits. It's a hard asset, the tax advantages, the equity buildup when you increase the value, and of course the leverage when you're buying one of these properties. They're not buying it all cash. They're using leverage, safe leverage, 25, 30% loan to value, and then they're able to scale the returns because they're buying such a higher asset class. Okay, and I just kind of went over this here: force appreciation by reducing expenses and raising rent. And of course, we're going to be looking at asset classes that done well through all market cycles, through like the 2008 crash, through the depressional aspects that we have now in our current market. These are the asset classes that done well. So that's why we're targeting these compared to smaller type of properties. Okay, so now we're on the evaluating market section. So I pulled up this report. This is a report done every year by this North American moving services company. So they have like a data center. They just kind of evaluate migration from different states. So I'll dig a little bit deeper into this report in a second. And if you want to take a look at this report, it's very interesting. They have a bunch of maps and charts and things like that. It's very interesting. So you can get that at northamerican.com/migration map. So the three main factors that we're going to look for in a very sound market is job growth, cost of living, and climate. And this is the map that they did for their recent survey for 2020 of the inbound and outbound of migration. So you can see here in nice little Connecticut around here, well, it's in the kind of the gray section is balance, but the Northeast, this whole section is having a huge outbound migration. And I'm pretty sure a lot of you can probably know the reasons why. High taxes, regulations, high regulations and tough regulations for business is not really business friendly. Landlord, tenant laws, it's pretty tough. And also it's cold up here. So it's it's a lot of different things. That's the reason why people are moving. And then you can see here the states that are receiving the population, like places like Florida, North and South Carolina, Texas, Arizona, and those markets there. And like I said, I encourage everyone to take a look at this report. It's really good. Okay, and then going into some of the details from this report, places like California are moving to Texas and Idaho, Illinois, New York, New Jersey are one of the top outbound moving states. The top inbound states, Idaho, Arizona, Tennessee, South Carolina, North Carolina, Tennessee, and so forth and so forth. And Florida, Texas, Colorado. So when we're looking at places to invest in, we had talked about before, there's a couple of deals here in Connecticut. It may be a nice, as far as like on the numbers on the spreadsheet, but as far as kind of we're looking for an overall good investable market, and Connecticut is unfortunately not one of them. Some nice places to visit here and do things in Connecticut, but as far as kind of investing, it's pertinent that we look in these type of markets as a passive investor. Next would be the job growth. I know, for example, is it GE that moved out of Connecticut to, I think, to Boston? I think it was like a year or two ago. And they cited taxes and job killing regulation. So that's just one example. And then you have places that recently moved out of California, like Oracle and Hewlett Packard. And those are major corporations. They moved to Texas. I think Elon Musk and a couple other prominent billionaires moved out of the state, for Texas as well. So we're looking at it from a cost of business standpoint. Salary and wages, it's a lower cost of living, meaning like if you go down to Texas, housing is more affordable down there, so therefore you have lower salary expectations. Tax rate for corporations, which don't allow them to expand and make more profit. And then on the personal side, people want more take-home pay. And of course, a lot of these states now are also, propping up more colleges and universities. So when people graduate, they're just going to stay in the state because those are where all of the jobs are. Okay. And then it's kind of for the cost of living, people are seeking, of course, lower cost of rent, property taxes, income taxes. And here's just another chart again to kind of reinforce my point of the migration out of these major states. And our state is on here negative 21,000. So it's just really, you just got to look at the data and then where it makes sense to invest. And then finally, climate. People, especially now through the pandemic, most people are working from home. I know Facebook, Twitter, a lot of those major tech companies, they said they can pretty much work home indefinitely. So if they can work home from indefinitely, do their job, then if people were given an option, they will live in a nicer climate market. Here, I know we just had, I think this picture I just took, I grabbed this from Google Images, happened to be the other day, I think like 2 days ago. So I don't know whose car is that over there, and this is a little picture of someone who's not liking the snow too much. And then next, they're all moving to places like, for example, that meets all of these criterias, which is getting majority of the major corporations, is like Austin, Texas. So that'll be a prime market that we as a group should be looking to consider and when we're looking at a syndication. I know this, along with our previous presentations, had a lot of what they say is a fire hose to the face, as far as kind of like so much information. So I'll kind of stop it now to ask if anyone have any questions that I can answer before we kind of give an update on what our group is doing. Let me just pop back here. I think we had a check in the chat box.
Yeah, I got a question.
Hey, what's up, D?
With the different buckets that you were referring to, I know the question that the previous caller asked is similar. If the goal is for everyone to have 5,000, then that's definitely feasible. Say, okay, I want to get in on a project. Here's 1,000. I'm gonna have, I don't know, 500, 1,000 come out my check or on my account every month, just for example. Now, let's say everybody else already has their money together. So right now you got, say, $46,000. The little part that needs to be made up is my remaining balance. Would that hold up everybody else? Or would that project go forward with somebody else and I go into another one?
Yeah, so if your goal is, you said that you want to put in, 4,000 or whatever it is, and someone can be able to contribute like $7,000 or whatever it is to meet that minimum requirement. So everyone doesn't have to come up with like $5,000. I mean, ideally it's easier because then we can be able to run the math and then you can see this is what your returns is. Everyone has an equal share of the LLC ownership. But yeah, it really comes down to just people taking action and investing whatever the amount they have. Me and Milton are also going to be investing into multiple buckets as well, because we want to invest into multiple properties. So we're going to be, for some of them, we're going to be making up any shortfalls, or any other members that want to say, hey, I got an extra 1,500 that I already invested 5,000, so I'm going to make it 6,500. So the more you can contribute, the higher return you're going to get. But ideally, it's easier, of course, everyone say, for the example purposes, I just use 5,000. But whatever it is for the comfort level of each person.
All right, fair enough.
Mary, was that does that answer your question as well?
Yeah, so, but is it worth it to invest? I keep going back and forth on this, to invest at a lower rate, because you're not going to make that much of an investment at the end. You know, you're not going to make much with it when you start low.
Yeah, I mean, ideally, yeah. If you have 50,000 and you want to contribute that, I mean, yeah. The reason why we wanted to kind of get over the hurdle, because the minimums of these syndications are 50, sometimes 75,000. Because I have other investors that we work with, accredited investors that do $100,000, $200,000 clips at a time. But we want to kind of set this group up where you have the option, you can do larger, and then we can match you up with larger investor groups, or we can have this type of smaller bucket where the contribution level is a little bit smaller, which allows for more people to contribute and then own the real estate. So yeah, so whatever contribution level, you can take up most of the bucket, and a couple other investors can join in with you. So it's really whatever your comfort level is. But I also kept it lower so people can say, I'm gonna get my feet wet, I'm actually gonna get started, rather than let me just wait till I get 50,000 to start investing. Hold on one second here. I got a question on the chat. One second here. Looking for returns. And is this? I think this Chana. So for this particular investment, yeah, I mean, ideally, I had showed an example, because on average, the cash on cash returns are ranging from 6 to 10% annually. And that's usually going across all of the asset types. So the question was, they were kind of expecting bigger returns. Yeah, you could probably get bigger returns on like a fix and flip deal, but this is commercial real estate. But the reason why this is more ideal is because you get the combined benefits of the tax benefits and the 2x multiple, and sometimes 1.7 multiple, meaning you invest 5,000, you can almost double your money within that 5-year period of time. Did that answer your question there? Okay.
Yep.
Another question was, can my LLC be a member of the group? Yes, you can. So you can have a separate LLC that invests into the LLC. So the way the Tribe Vest works, so we put the money into a shared bank account. We create a shared LLC, which it can be 10 partners LLC or whatever it is, and we pool the money in there. But you can also use a separate LLC to use that to invest into the entity as well. And I had interviewed an attorney out in Wyoming. He does a Wyoming LLCs, which is a very strong state to form an LLC because of the anonymity laws that they have there. And I asked him that particular question of actually kind of combining multiple LLCs, and he does, says that is a good idea because it actually adds another layer of protection. Okay. Accredited investors, was that the question? So accredited investor is a designation by the Security and Exchange Commission for, because some of these projects only allow accredited investors, meaning you have to have a certain net worth, which is 200,000 over the course of 3 years, a total net worth of $1 million minus your home residence. Okay. Any other questions here? Hi, Nicole. I see you joined on. I did not send the last replay. I'm going to do that after the call, and because I had to do some editing to the presentation. So I'll send that out tonight when I send out this presentation, the replay tomorrow. Did you have any questions on here as well? Because I know that you missed the last meeting.
I did, no problem. Just the, can you use the self-directed IRA to invest, or it just has to be your own personal money?
Yeah, absolutely. So, because we're gonna have another presentation on that, and we'll bring on a self-directed IRA custodian. But yeah, you could, if you have a 401k with your employer, or you have like just an IRA, you convert that over to a self-directed IRA, which means you can just basically control your funds. The only way is that you go with the custodian. So the entity that you'll be investing in will be, Nicole Crenshaw, IRA beneficiary LLC that will be investing into the project. So all of your proceeds, the cash flow has to go back into the IRA. So in order for you to maintain that tax status. But yeah,
Okay.
a lot of people utilize those funds all the time because they, of course, if it's tied up with the employer, it's tied with the financial markets, tied with the stocks. So they want to kind of get out of that in order to earn a higher return on investment through investing with the commercial real estate.
All right, thank you.
Oh, no problem. Okay. Yeah, I know some other people kind of joined on late, so I just want to make sure everyone had they missed a couple of the slides early on if they missed the concept, if they have any questions there. Let me.
Hey, Dwaine, it's Fred. I did miss the early part, but just that with that self-directed IRA question. So it feels like do you lose the other tax benefits if you do it out of there? I was thinking about cost segregation that you mentioned, but I don't know how that comes together.
No, so the cost segregation is just a tax strategy in order to kind of draw more benefits out of the property as far as kind of for tax purposes. But when you invest with the self-directed IRA, that's just like a separate account. It's already it's a tax-free account anyway for your retirement. So once all of the proceeds come out, you're going to be earning more because of you'll be paying less than the income tax when you get your K-1 statement. So yeah, just using the IRA is just another source of funds that you can use outside of your idle funds to use to invest, and then of course you get all the tax benefits from it.
Okay.
Let's see. And then China, is it China? That was your question, right? That you sent to the chat box, right? Let me just double check here.
Sorry, it's China, Dwaine.
Oh, I apologize. Yeah, I just want to make sure if I had answered your question properly there.
Yeah, you
did. Like answer the question and read the chat at the same time, so I'm sorry. Okay, so did I actually answer it through, you had mentioned accredited investor. What will it take to pull the?
I actually thought you said credit, not accredited. So I was like, what's a credit investor?
Oh, I apologize. Yeah, I meant accredited investor. Okay, so how long would it take for us to pull the trigger on a deal? Okay, so once we reach the goal, so for our first tribe, we pretty much have all of the contributions are there. We're just going to finalize the entity documents, which is our agreement documents that we all have to review, and then finally the bank account, and then transfer it from the escrow to our shared bank account. And once we have that there and identify the sponsor, we're pretty much going to be looking to invest this within the next month or two. So it's pretty much waiting for the next sponsor opportunity within the sponsors that we selected. Make sure the deal that we like it, and then we're going to invest right away. So that's kind of the other purpose of the TribeVest account, is that we can be able to have the funds ready. So once that opportunity does come, and then we finally screen it and make sense, we can pull a trigger rather than, hey, here's a deal, send it to everyone thinks about it, and then by the time we come around to it, the deal is gone. Because some of these deals oversubscribed within like a couple of hours in some cases. So that's the reason why we kind of have our funds ready, even if we're not going to pull the trigger, we can kind of just have the capital ready. You can pull it out at any time. You have that option until once we're ready to actually make the investment. So that kind of allows us to kind of be ready once opportunity does present itself. So it's one time.
Dwayne is trying to.
Yes.
So is this an interest-bearing account that the money's sitting in?
Yeah. So it's a same FDIC bank account, insured up to 250. You know, all the standard same type of bank that you. I think it's called BV. I forget the name of the actual bank. I'll send all the information as well in there. We can do another demo of the back end. But it's a national bank. It's all FDIC, federal regulated, and it's interest bearing account. So the money is going to be sitting in there earning interest before we pull the trick on any deal.
Okay.
So it's one time 5K for each investment, or will it be assessments added each year? So the thanks Maxine for the question. So from what I'm getting from your question, is there going to be an additional capital cost? So no, once you make if you decide to do 5K, that's it. So what the sponsor's responsibility is to assess how much capital they need, they raise it, and then be able to perform the business plan without asking for any additional capital whatsoever. So that means they have to do a good job at budgeting and making sure their numbers make sense so they can be able to run the project with no problem. And usually some sponsors that do ask for capital calls are inexperienced, meaning that they didn't estimate that their construction budget was going to be $100,000 more than what they anticipated. Therefore, they're going to go back to the limited partners to ask them for more money. The sponsors we're going to work with are going to be highly liquid, but also have experience in these type of projects that they're going to be investing in. So they're not going to have any need for capital calls. And in most cases, they actually oversubscribe, meaning they raised a little bit more what they accounted for, just in case they needed like a little bit of wiggle room for some unexpected, thing that happened. But that's stuff that they have to plan ahead of time, so they don't go back to the investors asking for more money. Hope that answers your question there.
Yes, it did. Thank you.
Oh, perfect. Okay. Where are you from, Maxine? Are you also in Connecticut or Massachusetts?
Yeah, I live in Bloomfield.
Oh, okay. So you're not too far. Okay. So nice for you to come on as well. I think we have some new people. Sam, THIERRY. Apologies if I can't pronounce the name, but just want to greet everybody into the to the meeting. Okay. And then Sam as well. Okay. So any other question that happen to pop up? And you can always email me at any time or give me a call. And then here's my number and Milton's number. And you can I'll make sure to send this out after the meeting. And just give me a call if you want me to run through this whole presentation just for you. I could do that. I just want everyone to feel comfortable through the process. And we, of course, pace ourselves, take our time so everyone understands the whole concept. It's fully educated. We're going to go through every step of the process with you until you feel comfortable. And there's something that you want to do, we're going to, be there with you as well. So the next couple meetings, so we did the market. So we're going to now do what to look for in the real estate. So this is like kind of the granular level of looking at it from a price per door, looking at the local real estate market, like what's the rent per square foot of it in the marketplace? What are their asking rents? So all of that stuff that the sponsor looks at the deal on a local level to see if the deal makes sense. So we're going to make sure to go through that process next week. The following week, we're going to get a copy of a private placement memorandum. So once we decide to invest, the sponsor is going to send us, by law, a document called a private placement memorandum, or they call it PPM, which is basically a legal document saying what can go wrong with the deal, you know, what's all the legal jargon, everything's going to be in there. And I'm trying to coordinating schedules, and hopefully they can be able to attend. You know, one of two securities exchange attorneys that draft these documents that can come on and answer all our questions, kind of give us some tips on what to look for to make sure that we're fully aware of the whole process. Because, you know, you get this 50-page document and then people start getting nervous. So I want people to see it. We'll send out a copy of one that we have from a previous deal, so everyone can kind of see what to expect, what to look for. I think there's also including an operating agreement that comes along with it, which just lays out the business plan of the entity that purchased the property. So we'll go through that in process. And then finally, the investing process. So once we have made the investment, what to expect each month, like as far as communications, K-1 statements that we receive for our accountants for taxes, and, you know, just kind of like what happens afterwards. And then when they plan to sell it, what do they do afterwards? Do they do, you know, a 1031 exchange, or do they just return the funds? We'll go through all of that in details. So let me see here. I think we have another question. Yes, so Fred, so we did do a session on evaluating the sponsor. That was, I think that was 2 weeks ago. And I will send you the link for that one, so you can take a look at that recording.
Okay, thanks.
Absolutely. For me, late, right? Don't want to. Oh, okay, so it's like, yeah, I got your message here. We'll have this recorded, so we'll send out the replay so everyone who came on late can get a copy of this.
Thank you, I appreciate it.
Absolutely. And yes, for the so the first one has been established already for the tribe vest. So I can actually do once, if we get through the materials for next week, what I'll do is I'll do a screen share of the count of, you know, with all the investments and, you know, with all the documents. So we're just waiting for the entity documents to get all that started. We have the template already. We're going to finalize that, and we're going to upload that into TribeVest. So I'll show you a copy of that, along with kind of like, you know, we'll show how much people contributed, and then, you know, kind of the whole layout of the whole system. And then once we are ready to make the investment, I'll show you that whole process as well once we get through there. And then also for TribeVest or any of this stuff, I mean, obviously it's nice that we do it as a group, but TribeVest is for everybody. So if you and your family or your friends, or you have investors and you want to go invest in a syndication or go buy a deal together, this is just a great platform to use it. So there's nothing exclusive for us. We just found these guys, and we just like the whole platform, how it's transparent, it's easy to use. But yeah, I encourage everyone who wants to, you know, to invest, and this is just a way of, you know, of doing it, and you know, make it easier. So, but the main goal is, if the larger numbers that we grow, we're able to get more exclusive deals. We're able to talk to different more sponsors and do multiple deals at the same time. So that's why I kind of like the power of our group. But again, it's not exclusive to us. Yes, who's that? Someone had a question? Oh, so the fee of TribeVest, so it's $400 per tribe. So you start up a tribe, it's cost $400, and that also includes the LLC document. So the nice thing about the system is you start up a tribe, you enter in all your details, you set in your funding goals, you put your mission statement, and then when you start getting the capital in there, you can then now form an LLC in any state. So what they do is, out of that 400, they minus off whatever the state filing fees is, and you actually can do all that from the app. Normally, you have to go to the Secretary of State website, download the form, fill it out. Now you can do it online now, but back in the day, you used to have to fill it out and mail it, and then it takes 2 weeks. But you actually do it from TribeVest app, which is pretty good. And from there, you can then set up You can connect all your bank accounts for each member so they can make their investment. And then you can connect and create a business bank account from the app, which is pretty cool too. So you can connect everything, so it's all in one place. It's all transparent. Everybody sees what's going on, and it's just really simple and easy to do. And you can do it within, depending on how fast the state that you file an LLC, it can take a couple days. So I got your email, and all right, thank you. So I'll copy that and make sure to send that presentation over to you. Anybody else have any other questions or thoughts or concerns, or hey, how does this work, or whatever it is, Or if anyone wanted me to go over something again, I could do that as well, because I know that we had a couple people that kind of jumped on a little late.
Yeah, I mean, if you could just go over the gist of everything, I would appreciate it, because I missed.
Kind of the syndication part, or the markets part.
The syndication part.
Yeah. Okay. Perfect. So are you familiar with like syndications at all, or?
Yes, I am familiar with the syndication, but is there you said there's a deal that we're looking at over here? Is it a deal that you need
right now?
syndicated?
Yeah. So we formed the first tribe bucket already. So we have 50,000 that's committed from our first group of investors. So and then we also identified some sponsors that we're gonna look at the first investment with. And so now I think one deal they just sent out for apartment deal that we just looked at, that one's already filled up. So we're going to be looking at the next one. But I wanted to kind of run it through everyone so everyone kind of sees the process at the same time. So yeah, we already kind of started it. And so it's kind of like a real live process where everyone kind of seeing it in person as well as getting involved at the same time. But for the syndication, since you're familiar with the process of the syndication of pooling the funds, we're getting over the hurdle of the minimum of the $50,000 and $100,000, which it typically takes to invest into a deal. So, and in that, we're using a platform called TribeVest to then kind of do a group investment. So we pool those monies together to get the minimum that the syndication requires, then using that money to invest into a project. So that's kind of the goal of this group, so we can get more people who wanted to be invested in commercial real estate, who have been sitting on the sidelines. And 2021, we're going to just get educated and then kind of get started. So that's kind of the process of it. But typically, if you have $50,000 and you just want to invest yourself, then we're also going to teach you kind of the process of going through a whole deal, evaluating a sponsor, the market, the real estate, everything. So you can do this on yourself, or you can join us, to do the TribeVest group as well. So we give that multiple options. So nothing is exclusive to us.
Okay, but this is through TribeVest?
Yeah, so we're using this platform. The reason why is because it's because of the many benefits it has. Because ideally, you can do all of the functions of TribeVest on your own. So we can start up a separate LLC. I can go to the Secretary of State and form an entity. We can create a business bank account, link them together, and I could just get on the phone and just call everyone and say, hey, where's your money? Let's put into the pool, and so we can get invested. But through this, it kind of takes away all of the heavy lifting on the person who formed the group, as well as to kind of, they say to maintain relationships. So it's not me calling you saying, hey, where's the funds? You can go in at your own pace. It's all transparent. They log all of the conversations in there. You can do voting in there. It's really easy to use through your phone or your desktop. They have a ability where you can contribute weekly, monthly, however you like, from your bank account. So it's really like a nice tool to use, but it's a completely neutral third party. So it doesn't like invest for us. It doesn't find any investment for us. That's all on us as the tribe. They're just the third party platform that we use to get our goals done.
Okay, and how are you looking for these investments, these sponsors?
So I've been I know a lot of them personally, and so I can, because I'm also an investment broker, for over 8 years, and so I've been involved in the multiple spaces for a long time. And unfortunately, I also have a podcast show that I've been doing for 2 years where I interview a lot of the major sponsors, and I just kind of use that as kind of like a brain picking session where I'm able to kind of get to know them, learn about their process, understand their investments and their track record, and then I'm able to then now on our end as the group leaders, we're going to be forming kind of like a big list of sponsors, and then kind of like evaluation as far as their communication style, the type of investments they invested in the past, their track record. We're also going to talk to some of their investors that they dealt with in the past. So once we present it to the group, you guys have a nice understanding of who you're dealing with, as far as kind of all of the elements that make them a good sponsor to invest with in the first place. So we're going to do a lot of the heavy lifting on our end for the benefit of the group, so everyone is fully educated and fully aware and feel comfortable making that leap. Because I know, like I said, syndications and apartment building in Texas can seem very intimidating, but once we break down all of the elements and we provide all the information and we take it step by step, and then we finally make our decision, I think it doesn't feel too intimidating. It'll feel like, okay, I'm ready to do this and really grow my money. So that's why I want everyone to kind of feel comfortable on that level.
Okay, and how many deals does this group actually have?
Yeah, so we're looking at multiple asset classes, so multifamily, self-storage, manufactured home parks, and net lease. So there's multiple sponsors we're going to be looking at, and that's the reason I kind of like this setup for the TriVest, because I'm able to spread out my money into multiple buckets to invest into multiple deals at the same time. But we're only going to be looking at they're going to have like a certain level of expertise that. Well, one big thing is they call full cycle deals. So meaning they purchased a deal with investors' capital, they implemented their business plan, they went through everything, and then they successfully sold the deal, and then in return the investors back their money. And we want to also see that multiple times in a certain market. They have like expertise in a certain market. So there's certain criteria that they must meet before we even consider them as a sponsor that we invest with, because the number one thing is capital preservation. We want to make sure capital is secure before even talking about returns. We want to make sure that if you invest $5, $50, $100,000, that you feel very comfortable with the sponsor, because in essence we're partnering with them. So we got to trust them that they're going to take care of our money. So
absolutely.
So we have a list, and it's going to be a list that I'm going to be sending out to the group, and it's this continuously working spreadsheet. I think there's like 120 that I've already analyzed already, and I'll have that data for everyone soon. So either through our group, or if you want to go invest with them, and it'll be a good resource for you and your tribe or whatever it is, you at least have those resources for your benefit.
Okay, and how would I be able to join?
So the first group, we already have the 50,000 committed, and then a couple people also express interest in the next bucket. So the next bucket I haven't started that officially yet. So next week actually I'll be officially opening that up. So whatever people wants to join in there at whatever level cost, starting out, and then they can do partial payment or whatever it is. We'll have that available for the next one, and then once we hit a specific goal from there, then we'll look at the investments. But by that time, we'll already look to invest and make that first investment, and everyone will already see that process already. Must we use TriVest, or can we send you a check if we choose? Well, since the way the process is, and that's why I like the TriVest, because it takes away like sending me anything, because once we form the group, you will be a part owner of that LLC. Your name will be on the entity document, so you'll be a co-owner, and then it will have a shared bank account. So it'll be like 10 Partners LLC will be the name of the company, and it'll have an address or whatever. So then we can actually send that check right to that bank, and it'll go into that entity that we formed. And then you'll see that reflected into TriVest, because the bank would then link with our account. So then you know that the money is there. You know when you sent it, or have all the notes and everything in there. So it just leaves it more transparent. So that money actually will go to the LLC, not to any individual. Does that answer your question there?
Yes.
All right, perfect. I think that was Chana that question came from. Thank you so much for that one. So yeah, just really so TriVest is just a vehicle that we're using, but normally you can create all of these steps directly by yourself, but it's just using this new age tool. And right now we're doing all our meetings through Zoom, and that's the way the world is. Everything's more technology, and I hope sooner rather than later we can actually meet in person. We normally meet at a Jamaican Kitchen in Vernon, at Milton, my partner's restaurant, and there's a nice little space there. We eat, have a couple drinks, and just kind of get to know each other, and then also we learn at the same time. We also, once it gets warmer, we also had a couple plans to do, like when we're allowed to, bowling and like outdoor events and things like that. I think there's a wine place you can do wine tasting, just something that we can do and get to know each other, and at the same time learn and invest and make some money. So that's really the whole goal is. So it's agreed in writing that we hold a property. So the whole period of time. So the question was, as far as how long we hold the property. So the sponsor sets the business plan. So the private placement memorandum and the offering memorandum that they send to us to review will lay out the whole investment business plan per se. So they're going to say, we're going to buy this property in Texas, a 400 unit for $32 million. We plan on holding this property from 3 to 5 years. They don't give an exact date, because what they do is they look at the market conditions, because like how we went through COVID, some people couldn't immediately sell because a lot of the investments halted. No one was doing any trading for at least a good month. I think it was like in March, everything kind of just froze. The banks went to different departments from mitigation to loan servicing. And then once everything kind of got back up and running, and then they said, okay, it wasn't as bad as we thought, or whatever it was based off of the market metrics, then they can say, okay, we're going to proceed at this pace. But ideally, most of them are ranging from a 3 to 7 year period, and on average, most of them are in that 5 year buy and sell period. And then they structure the loan that they have on the property around their business plan. So they'll get like a 10-year fixed rate interest loan on the property. So they plan on selling it before, or sometimes they'll get bridge financing that they have to sell. So it's really they really take a big study of everything to make sure that they kind of have an idea of when they will sell. But ideally, they can't guarantee that they're going to sell at year 5. But on average, most of the deals are ranging in that 5 year range. But of course, we're going to look at the details, look at the market, look at their business plan to see if that's something that is realistic for them to do. All right, so Fred, thank you so much. I really appreciate it. You coming on. We'll make sure to get that replay out to you so you can check it out. Any questions, please email me. Obviously, if we collect the 50 down payment, what bank do the commercial purchase? What bank is the joint? Sam, would you be able to just open up your mic to kind of explain your question again? I don't really understand quite.
Yeah. Hey, Dwayne, how are you? Hey, thank you for the invite.
Absolutely.
No, I'm just wondering. Okay, we collect the down payment, and then we, hopefully by then we have a property that we like, right?
Mhm.
So what about the loan itself? I mean, do you guys have a bank that you work specifically with, or we just go around and try to get the loan funded?
Oh no. So the 50,000 raise that we do is only for the contribution to the equity that they're raising on the property. So the sponsor, they're doing all of the heavy lifting. So they go on, they find the property, they make the offer, they get accepted by the seller, they go arrange the financing with the bank already in place. They put down their down payment, and usually it's sometimes 3 to 5% down. Sometimes they like $350,000 down. That's not including attorney fees and cost segregationists and all these different types of consultants that they have to hire. So they do all of that. So they're in a position to purchase the property, but they're going to bring in equity from us as passive investors to join in to co-own the deal. So the 50,000 actually goes into, of course, the part of the down payment and all of the acquisition cost of the property. But as far as the bank financing, that's already pre-planned and pre-set up with the sponsor already. We're just contributing as a partner into the deal to help them close the deal. So yeah, we're not dealing with any banks directly. We're just being a partner in one of their deals. You kind of understand what I'm saying?
Yeah, thank you. Got it. Appreciate it.
Absolutely. Yeah. So in like a traditional sense, like if we all got together and say, hey, let's go buy a duplex down the road, and we need 50,000, then then we will have to go out and look for a bank to do the financing and do all that stuff. But we're really on the passive side. So we're working with experienced sponsors that have done this multiple times before, that has the track record, they have the experience, they have the resources to get these deals done. And we're just coming in and say, here's some capital. We're going to be part owners of the deal, and you're going to do all of the work for us. So we're just really just being hands off. They do all the work, and then we get all the benefits as a co-owner. But if you wanted to do your own tribe, that you say you have a couple friends or family, and you guys want to buy a deal, then yeah, the tribe vest, you can collect your down payment and then look for a bank. But yeah, this is a total different type of investment strategy that we're doing. All righty, so that was, let me just check any more questions.
Dwaine, this is Chana.
Hey, Chana.
I wanted to know, how long does a commercial deal usually take on average, the type of deals you're looking into?
You mean to acquire them, or to buy and hold them, or?
The process from the acquisition process, from signing the contract to go forward.
Yeah, so usually it takes like between 90 and at the very latest 120 days. But on average, they're probably about 60 to 90 days. So,
Okay.
Yeah, so but by the time they send it to us, they already have the property under contract, and they have their loan in place, and they're looking to close within sometimes 3 to 4 weeks. So usually the time once we get involved is within 3 to 4 weeks, and then they'll finally close on the property, and that's when they start
Okay.
there. But yeah, they start long because they have to go out and they have to fly out to the property. They have to do their inspections. They have to do their second inspections and all that stuff. So it takes a lot of time, a lot of effort on their end. So by the time we get it to evaluate it, it's going to be about another 3 to 4 weeks before they finally close on the property.
Okay. What was I gonna ask? And how often are you getting deals that are, most pleasing, are more in tune to what you're looking for?
Pretty. I mean, it's pretty consistent. I mean, I personally talked to over 130 sponsors. Apartment investors, multifamily, self-storage, all different types. So they're always looking for deals. They're always acquiring new deals. One of the biggest ones called Ashcroft Capital. They have about I think 9,000 units, over 1.1 billion in assets under management. So they're like buying a couple deals a month. So like it's pretty active. And usually the ones that are really experienced, that have closed many deals, they're getting sent all these deals from, off market, and all of the brokers are calling them because they know that they can close. So they're getting looked at a lot of opportunities. But at the same time, they have to base it off of their acquisition criteria. So they're not just kind of buying anything that they see, like we just went through the multiple factors to look at a deal, to make sure that it even makes sense. But yeah, there's a pretty decent deal flow that they get that will definitely be presenting to the group to kind of look at as examples for something we want to invest in. Let me just double check here the chat. I think I covered everybody's question here in the chat box.
The deal type, like I know you mentioned mobile home, park, storage facilities. Do you have a preference?
I'm a big in diversification. So I like all of them because
I didn't hear.
I'm sorry, what was that?
We're breaking up.
Oh, I apologize. Yeah, I said I like 4 of the asset classes because of the way that they perform well in the multiple market cycles. So that's kind of like my attraction is to diversify into multiple. I specialize in my brokerage firm, single tenant net lease, which is another good asset class. So I sell like CVS and Walgreens, 7-Eleven, McDonald's, Dollar Generals. Those are all been open during the pandemic. They have record sales. They're essential tenants. And then of course, mobile home parks and self stores, they've been doing well for decades through all of the market cycles. They've been doing very well. And of course, apartments as well, for the many reasons why, people need places to live. So I don't really have a particular favorite, but then we will look at it a deal by deal basis. So we'll look at multiple deals, multiple asset classes, and then we'll say, okay, these numbers are really attractive. The property is in a good location. I like the sponsor. Everything makes sense. We're going to invest in that deal. But then we're also going to look at maybe this multifamily looks really good, and we end up investing in a whole bunch of those for a long time. So it's so we're gonna take it like a deal by deal basis to make sure that we hit all of our criteria that makes sense as far as like an investable deal.
All right, thank you.
Absolutely. So I'll give an update because, like I said, I got a couple messages that were interested in the next try bucket, so I can get that open right away so we can send out some emails. And if everyone wants to participate, just let me know. And what the process is this: I just open it up, I send you the link, and you just kind of everything's like self-explanatory through the application, and I can walk you through it. They also have their customer service, and they can walk you through any of that process as well. But so it'll probably be good. I can do a demo so you can kind of see the whole process on what it looks like. But it's really no different than me or any of us forming a group and say, hey, we're going to get together to form an LLC, and we're going to create an agreement and form a bank account. It's literally the same exact thing, but just done on a platform that is like a third-party neutral platform. So I can I'll schedule a time when we can do that, and if anyone wants any personal demos, I can do that as well, just so everyone can kind of see the whole process. But I'll start that up next week so we can start kind of, if everyone want to kind of start a little bit, get your feet wet, or kind of see how the process plays out.
Dwaine, another question.
Yes.
The tri-vest is a must. Is it a must? Can we send in money via check, or the tri-vest is a must?
Well, the tri-vest is simply just the vehicle that we do the work in, But like if you have a check, there's going to be a business bank account that you're going to be a co-owner of. We're going to also have the entity documents that show you as a part owner. And then you can say if you're whatever amount that you said you wanted to invest, and you're going to write a check, you can actually send it to the bank directly. That's in the name of the LLC.
Okay.
Yeah, you're going to be a co-owner of it. So you just write it directly to them. And then once they process it, then you can log into TriVest and you can say, okay, here's my investment. It's in there. The bank received it, they processed it, and it shows it all in there. So it's transparent and it shows you the receipts and everything. So you know that it's securely in there. And it goes into FDIC insured bank. So it's like a regular national bank. So it's not like some type of escrow account that TriVest created or something like that. They're like, they don't have any connection to it. Everything is all through us. So like once we get the login, it's just us. They don't have any, unless it's from like any support that they need to help us with. Other than that, like it's all our stuff that's in there.
Okay, if we want to invest, say we initially invest 5,000, and then we want to invest another 5 or 10,000. At what point do we have to get that next set in?
Yeah, so say if you wanted to do for the first round, so the process will be you say you're gonna make a contribution of whatever X amount. We all agree on it, and we have our end goal. And then once we make the goal that we all agreed on, then we're gonna form the LLC, which we have to go register with the Secretary of State, and then we have to put all the details into the entity document, which is just a several page document laying out the whole business plan, saying Chana has 30% of the shares of this LLC, and Nicole has X amount of shares of this LLC, and Phil has another, so it lays everything out in detail. It says that we're going to be investing for the purposes of buying a single purpose investment property for cash flow, and then once the cash flow comes, it's going to go. So it lays everything out there. And as far as like once we get to that process and then we're ready to invest, by that time it's going to be cut off because we're ready to form the investment to send off to the sponsor. But if you have like another 10 and 15,000 that you want to do, and we form another bucket, you can put it in there. But we're going to probably set the cutoff once we actually get the LLC created, because by that time it's a legal entity that we're forming together.
Mm-hmm. Okay.
Yeah, because you think about you're part owner of the business, so it's like once we're ready to make the investment, it's already going to be out the door. So that's the reason why. I see another question. So I'm invested into 2 industrial net lease properties, and what they returns are 8% preferred return. And we'll get to that into the next presentation. So preferred returns are a return that's promised by the sponsor that comes off the top. So we're going to be getting profits from the cash flow of the property. So if the profits are the rent that comes in minus all the expenses is the net operating income. So that's the income minus all the expenses. So that's whatever is net. So we're going to get a piece of whatever that income is. But in some states, some structures, they have a preferred return, which means because the investor has to go through certain hurdles in the business plan, which is decrease the expenses, increase the rents, and sometimes that's going to take them 3 to 5 years to complete those portions. So in the meantime, to give the benefit to the investors to become an investor, they offer what they call a preferred return, which means whatever the 8% out of that net operating income, it gets paid to the partners first, because normally it's a escalating return over the course of the years, but they offer to give the investor a preferred return first before any of the profit goes out to the sponsor. Because there's going to be a proportion of the deal that's owned by the sponsor, because they need to get paid from it too, because they're also part owners. So the way they structure is whatever that net income, they have a section where you as the partner gets paid that percentage first. So the deals that I'm invested in, these two net lease deals in Texas, they have an 8% preferred return. So I'm getting that each month along with a bonus capital return annually. So I'll explain. I actually can bring up that deal on the next call to kind of show you an example of that. Hopefully that didn't confuse people too much, but I want to kind of have another presentation that kind of details that in more general terms. And then we'll cover that also in the investing process presentation also, when we look at an actual PPM and offering memorandum. Did that kind of answer your question a little bit there? How do you pronounce your name? The theory? I apologize if I mispronounced that.
Yes.
How do you pronounce your name?
Theory.
Oh, theory. I apologize. Okay. Yeah. So we'll cover that in the part of the next presentation, but then mainly into the last one that covers like the investing process. So we'll have a copy of a PPM and an offering memorandum, and we're going to look through all of the waterfalls and all that stuff. I'll pull up a spreadsheet and kind of dive deep into that, because that can kind of get into the weeds a bit.
Okay, but how about the sponsors? How about checking the sponsors out to see their track records? Yeah,
absolutely. So I'm putting together a detailed spreadsheet of all of the sponsors that I have personal relations with and that have good track records in the past. So we're going to be looking at all the deals that they've done in the past, the ones that went full cycle, so that they bought, sold, and returned investors' capital, that they have a clear investment criteria. So that means if they said that they specialize in properties in Texas, that they're not buying deals in like Connecticut and whatever. They're not like opportunity chasers. We want to work with disciplined investors. We're also going to talk to their previous investors that invested with them to find out how's their communications. Did you get your K1s on time? What was your whole thought and feels about them? Did they, for the deals that they did perform on, did they actually meet all of their metrics? Meaning, did they, finalize their business plan to the T? So we were going to go through and check through all of that. We actually went through that in detail in the last presentation, but I will also cover some of that in the next one if you're going to happen to be on the next presentation as well, because I want everyone to kind of understand the whole process of how we vet the sponsors and make sure that they're going to be a good steward of our money.
Okay. All right.
And China, did you have a question as well? Okay, I'll read it. So what restrictions are placed on the joint bank account? There's no restrictions, because we're going to be all part owners of the bank account. So if you invested, say for example, $1,000, and then you just change your mind or whatever it is, you can pull your money right back out of it. So there's no restrictions, because you're actual co-owner of the entity, and then we open the business bank account into the entity's name. So it's all of the rights and benefits that you get as the owner for there. When can you pull up? So when we invest into the syndication, because investing in real estate is illiquid, so you can't really, it's not like a stock where you can buy it and sell it the same day. So ideally, it's once we agree that we're going to be investing into a project, it's going to be for that cycle. So if they're going to hold the property for 5 years and then sell it, then it's going to be a 5-year investment. So because it's going to be kind of tough for them to have investors invest, and then if they change their mind, to pull out. In some cases, I've seen scenarios where the sponsor bought out the limited partner to return the investor's capital, but then it was at a discount. So meaning if you invested like 100,000, then the sponsor would say, hey, I will buy your shares, but I'm going to only give you like 90,000 back. So they'll offer that to you. They'll sometimes offer it to other investors in the deal. So if they have other investors that had an extra 100,000 and they say, hey, I'll buy your shares, and they can actually do that. But that scenario is really sometimes unlikely. We'll have to look at the entity documents that they have, if that's something that they do. But for the most part, that's why we want to kind of get into agreement before we form the investment to make everyone aware that we're actually investing for long-term and cash flow. So whatever you feel comfortable knowing that your money is going to be working for that period of time. So there's no restriction on how much you can put out. John, will you be able to just
Okay, I'm here.
questions? Yeah.
Okay, so what I wanted to, so when I mentioned pulling out money, I was referring to the bank account before you have a live deal. If, because you mentioned that you can pull out your money at any time if, if you want to pull your money out.
Mhm.
So being that we have access to this account, the bank account, if I put in only $1,000 and I wanted to pull out 5,000, will it allow me to do that?
Oh no, yeah, only your portion that you can only pull out. So yeah, it's not like untethered access to pull out of the bank account. So yeah, so it's only limited to your contribution that you can be able to. Yeah, that's
so those are the restrictions I was talking about.
Yeah, I apologize if I didn't understand. Yeah, so those are the restrictions. So those are like the safeguards that are in place that for all of the partners that's involved in the deal.
Okay. Question. How's the Houston market? Dwaine, do you know?
Yeah, the Houston market is very strong. Actually, I just sold a property there. It was a retail deal in Texas. I mean, in Houston. So it's very strong. They're getting a lot of migration there.
From?
A lot of employers are moving there, and a lot of some new construction is also popping up there as well. So it's a very strong marketplace. Like all of Texas is strong. I mean, overall, because of just no tax state, and then they have a lot of employers that's moving there all the time, and so it's just a really booming market. So overall, Texas, Austin, Dallas, Fort Worth, San Antonio. I mean, they're just really strong marketplace. I actually talked to a couple sponsors that they specialize in those particular marketplaces, because that's why you have to invest with like a sponsor that is, because since Texas is so large and some of these submarkets are pretty big, you got to be an expert on the local level, not just overall Texas. So you got to be knowing everything about Houston, because there's some section of Houston that is just not ready to be an investable market yet. You have to look at maybe the other areas that's maybe near the universities or near downtown or wherever all of the job centers are, or other places. So you got to be really local expert. That's why when we select a sponsor and that has a deal that's in Houston, we want to say, okay, how many deals have you done in Houston? Because Houston is different than Austin. So we'll make sure to really do our homework on all of those markets there. So this was kind of like a really broad overview of the kind of evaluating a marketplace. I do have another presentation I did last year that kind of goes in from the sponsor perspective of what they look at from a whole really dense level. They're looking at housing prices in the local level. They're looking at crime statistics. They're looking at any new construction projects. So they'll check with the local building department to find out how many permits were pulled. I mean, they really go really deep. They talk to the local business chamber of commerce to see what the business consensus is locally. they're talking to, you know, all of the schools and, you know, what schools, their expansion plans and zoning laws and all that stuff. So it's a lot, it takes a lot of work that they do to make sure that they're, and then one of the processes that the sponsors take that I know the Ashcroft does is that they have like a huge a research analysis that they constantly doing on a street level. So they're looking at every single thing. So when a deal comes up, they know exactly what area it is. They're quickly able to make a decision if they're gonna buy that deal or not. So that's why you need someone that has a track record and very familiar with not only the national market, the regional market, but also the local market.
Is it safe to say Ashcroft is one of your favorite sponsors?
Yeah, I like them a lot because they just have a very large track record. They specialize in, you know, the markets on the Sunbelt area, so they're like in Florida and Texas and I think Georgia as well, like in Atlanta, and also in North Carolina as well. They have a very they got so large now that they actually have their own property management company, a construction company. So yeah, so they're just very highly experienced, and like I said, they have tons of investors that we can talk to get testimonies from. So so it's really easy to kind of check their work to see if they're a sound sponsor. I encourage you to go check out their website, check out some of their past deals, and just so you can kind of get familiar with, you know, some of the criteria that we're going to look at to make a decision.
And how much deals do you see from Ashcroft monthly?
I mean, at least once a month they have something that they're working on. So,
Okay.
yeah, because they got almost close to 10,000 units. So they're each building is about you know, at least 200 plus units. So I mean, they're constantly buying, and then some of them they're selling. So then they have to kind of replace that. But I think currently they have a little bit over $1 billion total asset value that they have right now.
Do they have short-term rentals that they list on places like Airbnb and stuff like that? Is that part of it?
Yeah, it's just all apartments. So they're just a strictly multifamily investor. So yeah, so I mean, like, even for like their vacant units, it's all regular rentals. So I mean, I know a couple short-term investors, but yeah, these ones they just focus on multifamily.
And in terms of tenant type that they have, do you know if they're working with tenants that have Section 8 or not?
No, so they're only doing all market tenant. I mean, market properties, and then they specialize in I think B and A class properties. So B and A class properties are like in a certain level market, and then they also have you know, they're usually higher rents, you know, like a little bit more luxury style apartments. So yeah, so that's their specialty. They're more of the higher end properties, and they don't do any affordable housing.
That sounds good.
Yeah.
Oh, that was the right term. Sorry, affordable housing. Affordable.
No, yeah, I understand what you're saying. Yeah, because the difference with the affordable housing and like market is that you can't really force appreciation in those types of properties, so you can't really get the returns that we're looking at. So like when you have like $1,000 for the apartment, like, the rent is going to stay that way. Like with these apartments that they're buying, they're going to be increasing the rent and then increasing the value of the property. So I mean, there's some sponsors that specialize in affordable housing, and then that's a specific business plan. But we're looking at only market tenants.
Yeah, that sounds good. Though I must say, in places like New York City, they'll say affordable housing, but it'll be like 1 or 2% of the building that's affordable.
Exactly, yeah.
Yeah.
And plus, some markets they have rent caps. So like in California, even if it's market like a market property, they still have rent caps where you can't really increase the rent. So it's pretty tough. That's why you got to be really selective on what markets you invest in. So yeah, that's a big thing. Oh, good. Like I said, we got some good dialogue and some good questions and everything. And I hope I didn't take up everyone too much time. And hopefully everyone will be able to partake in, now or in the future. Like I said, just want to get as much education out there. And if you decide to do this yourself or you decide to join our group, we're going to be here to support each other and just kind of continuously grow the knowledge base. And also I have a spreadsheet that I want to send out to everyone as well. It's a passive investing spreadsheet. So you pretty much put in kind of how much money you're going to be investing, and it's like you kind of see where your net worth grows over the period of time. So it's a good way of kind of like planning and kind of give yourself a visual sense of how your money grows over the course of over a period of time. So I'm gonna send that out. I think it's a pretty nice tool because you can kind of play around with the numbers and kind of make goals for yourself. Because I'm really just for my goal this year is just to massively reduce my tax burden and then get most of my active income over to the passive income and just reduce my taxes and just get as much passive income as possible. So I know everyone has different goals in mind, but whatever it is, we can help you to get there as much as possible. We'll just provide as much resources and hopefully we can get you to your journey. So so I'll send out the presentation once it renders, and I got to finish editing the other one. I wanted to make sure I block out the faces and stuff like that if you don't want to, because we usually put it on YouTube, so some people can get more benefit from that. But I'll make sure to do that, and then I'll send it out so everyone can get access to it. So, but yeah, just give me a call anytime. I'm here and I work from my home office in Broadbrook, so I'm always here. And you can give me a ring anytime, shoot me an email, and I can chat with you one-on-one on the phone, whatever is your preference. And look forward to talking to everybody soon. But I'll definitely give an update when we open the second bucket, so we can, so whoever is interested, we can get that started if that's something everyone would like to see. So
Thanks, Dwaine.
Absolutely. So thank you so much again. Tomorrow's Friday, so enjoy the rest of the weekend. I don't think we have any snow coming up on the horizon, so I guess we can kind of be, thanks that's not going to happen. And my kids enjoy doing this. They're building snowmen in the front yard, so it's interesting. Doing all that stuff. So, all right, friends and family. So thank you so much again. I'll be talking to you guys soon. Like I said, reach out anytime. We'll see you at the next presentation, which is next week.
Thank you.
All right, take care.
Good night.
All right, good night. Bye-bye.